This tax year, I moved my ISA from Interactive Brokers to Trading 212. About a month ago, I posted my very first Invest With Me video using my new Trading 212 ISA, and since then I've been doing them regularly. But if you want to know every single move I make in my portfolio, and not all of them get posted onto YouTube, then please feel free to join my Patreon where I let those guys know exactly when and what I'm doing. But today I'm sharing my first portfolio update since having this ISA account. Before we jump into that, if you want a free share on Trading 212 worth up to £100, then I'll leave a link in the description below. You can open any of the accounts on Trading 212 and you only have to deposit £1. And if you do use this link, let me know which free share you get in the comments below. You can see that my total amount inside my ISA currently sits at £6,555.26. And we've only just started this new tax year. So I'm very excited to try and utilise as much of my ISA allowance as I possibly can in this tax year. That is one of my goals. You can see that I've invested £6,340.51. That's how much of my money I've put into this account. And then you can see that the difference between those two numbers is the return that I've got at this current point in time. It's currently Sunday, so there's not much movement right now, but you can see that I'm up by about £215, which works out to be 3.39%. Not too bad. But what you'll also see here in this little graph that I really like is if I expand this to a 3-month period. Actually, let's do a month because I've only actually been investing into this account for about a month now. You can see how volatile it's actually been. These big jumps here are every time that I've invested a substantial amount of money. So here, for example, the jump to this point, I invested a lot of money. But you can see as well, it's up, down, up, down, up, down. Sometimes I have been up by £500 and I've been sharing that with my Patreons. But then the next day I may be up by £100. So it's really, really day dependent. And that's why I'm not a short-term investor. I'm a long-term investor. I don't mind about these daily movements. They don't really bother me. If anything, I prefer to see them going down because there's probably more opportunity out there. But as I go through my portfolio, you'll start to understand why my performance is really volatile at the moment. It's because of some of these big growth stocks that I have. So just looking at all of the positions that I have now, you can see that I actually don't have all that many. So you could argue that perhaps I'm not very diversified, but that's a topic for a whole nother day. So just quickly running through these, I have Alphabet, which is of course Google, Amazon, Canadian Pacific Railway, Diageo, National Grid, Palantir, Segro, Tesla, Unilever, and then I have an ETF, Vanguard FTSE All World High Dividend Yield ETF, VHYL. For those of you who are new to my videos, I do also have 2 more ETFs that are held outside of this account on a previous ISA account on Vanguard, and they are VUSA, which is still my largest holding across any portfolio, and FTSE All Cap as well. So just bear that in mind along with these positions. But essentially what I'm trying to do now is really build up my position in high conviction companies. Those companies that I really believe are going to have a lot of growth, and I want a lot of money in those companies, rather than spreading it between 50 companies that I'm not really sure about. Maybe I believe in some of them, maybe I know a little bit about some of them, but you know, I'm not really that knowledgeable nor convicted into those companies. That's why I have fewer companies, because these are the ones that I really follow. And each one has a different reason as to why it's in my portfolio. Again, if you've been watching my Invest With Me's or you're a Patreon member and you see every time I make a move, the companies that I have been really trying to build my position in at the moment have been namely Amazon, Palantir, and Tesla. And that explains why those positions are my largest ones by weight inside this portfolio. I have identified those companies as the ones that I believe are currently at a discounted price that I think are going to do very well in the medium to long term future. Now, that's not financial advice at all. That's purely based on my own ideas and my own conclusions that I've drawn from my own research. So please don't just copy this blindly. Go and do your own research. Think about what companies you believe are going to do well over the future. But those are the ones that I'm currently trying to get as much money as possible into. If we just look at Amazon, for example, and we max it out on the graph here, it's currently trading at, well, it fluctuates day to day, but sometimes it's below $100. I do not believe Amazon is a $100 share company at all. We've seen how high it's gone in the past, and I think it's going to get back up there or maybe even higher. So my potential return on this company is quite high. Therefore, again, I want more money into it so I can really, really try and get as many returns as possible. Now, we've seen with a lot of the big tech companies, the big US tech companies at the moment, they have really had a knock on their price compared to what they were, you know, even a year ago. Back up here, they've taken a massive, massive knock. And I think that's a time for opportunity. There are not many times in the market, in the stock market history, where a company like Amazon, one of these massive, massive cap companies, there's a few more as well that we could name, but Amazon just as an example, where it's dropped by like 80% from its total all-time high. That is a crazy opportunity in my opinion, and I don't think we're going to see many more in the future. Not like this anyway. So I'm trying to just take advantage of this opportunity. And of course, companies like Amazon, Palantir, Tesla, they're companies that make the news every day. And everything that happens in these companies, whether it's a news article on them having a new acquisition, whether it's an earnings report, whatever it may be, all of these things, even just market noise, they really affect the stock price. And sometimes you just have to step back and think about the bigger picture. Take everything that you learn about a company and then try and assess if you think that company is going to go on to do bigger and better things. Because if you just look at the news every day, you can really be put off and you can think, oh, Amazon are cutting staff. They're doing this, they're doing that. They're going downhill. Their stock price has fallen by 80%. I can't invest into this. They're not going to be a good company to have in my portfolio. But it's really, really important to try and keep your own emotions out of it and not get scared. Like Warren Buffett says, be greedy when others are fearful, and that's exactly what I'm trying to do now. I went off on a bit of a tangent here. There are other companies inside my portfolio, like Diageo, like Canadian Pacific Railway, like National Grid, that are more safe plays. They're not these massive high growth companies, not these big tech companies. They are more there because I believe that these companies are going to continue to do well over time, and they just lower my risk slightly in my own opinion. Now, we have got Tesla in my portfolio, which is, along with Palantir, perhaps, well, it is the company that I'm the most bullish on. I don't view Tesla as an electric car company. I think it's so much more than that. And I've spoke about this time and time again, but I just feel like this company is gonna do incredible things in lots and lots of different sectors. They are leading the electric vehicle sector completely. They are dominating it. There are competitors for sure, and I think that some of those competitors will gain market share as time goes on, and they'll do really good things as well, and I'm all up for that. But I just think Tesla is so far ahead of the game at the moment, years ahead. You know, their margins are fantastic. Their supply and demand is fantastic. I could go off and, you know, there's news around Tesla at the moment. They've opened a new factory for batteries. I'm not going to sit here and make this a Tesla video, but this tends to be a very, very volatile one to have. I've learned that the hard way. I've seen this position is my biggest one in the portfolio. And right now you can see that I'm only up by just under £23. So not even 1%. But I have seen this go up by £400 on a given day. And it is crazy. But again, you need to step back and look at the long-term picture and just not look at the day-to-day movements. Otherwise, yeah, it can turn your stomach a little bit, seeing it go from 400 up to 20 down. You know, it's crazy. And again, with Palantir, this is a company that I have strong conviction for, but it is a company that I don't think is for everyone. It's one of those companies that is a bit more high risk at the moment. Not everyone believes in them. Some people think that it's like a spy company and all of the news around that. It's a little bit of another crazy one to have, but I think try and spend some time understanding the potential of this company. That's what I did, and that's why I now want it in my own portfolio. But again, it's quite a volatile one, and at the moment, I think the stock price is very, very low for what this company is actually worth. Just looking at my allocation now to give you an even bigger insight, 46% of my portfolio is currently allocated to Tesla. That is a heavy allocation, and some people will think that's really, really silly. But the way that I view diversification and conviction and allocation, I'm viewing it for what's best for me right now. And right now I can take on more risk for more reward. And also the allocation that I have at the moment is where I believe my capital is best spent right now. I don't see the point of diversifying my portfolio and putting my money across 50 different companies, like I said, that I think are all average companies, when I can put the majority of my money in less than 10 companies that I really, really believe in. And that's kind of what I'm following. So you can see Tesla at 46%, Palantir about 12%, and then it goes to an ETF, back to Amazon, and you can see it all laid out in front of you here. This will of course change as I add money to different positions, and I don't really care about keeping a certain company at a certain allocation. I'm just going to put my money where I think it's best spent, and I don't really mind how that shifts this allocation whatsoever. It's not even something I really pay attention to. I wanted to let you guys know that there's been another perk added to the Patreon. So now what I'm doing is, as often as I can possibly arrange them, I'm going to have people come in to speak exclusively to my Patreon members about a topic that that person is an expert in or knows much more than me about. So I'm kicking this off next week, having Lewis Jackson, also known as Crypto Lulu on YouTube, come in and speak all about XRP. And it's a time that my Patreons can ask questions if they want, or they can just listen to the experts' insights. Obviously, this first one is all about XRP, so it's crypto based, but if crypto is not your thing, there will be ones in the future that are based on US stocks, UK stocks, diversification, all different topics in general. So I hope to see some more of you guys there. On that note, I hope you enjoyed this portfolio update. Let me know how your portfolio is doing. Thank you so much for watching, and I'll see you next time.